Hello and happy Sunday, friends. I hope you guys are well. I will wait for Instagram to give us this message that we are live, and then you guys can tap in. I hope you guys had a very successful trading week. It has actually been a great trading week for us. The last weeks have been very strong trading weeks for us. As many of you know, we've kind of adapted our Discord a bit in order to separate it between all of our discretionary trades, which are essentially just every day or week or month, the same exact setups. And those have continued to perform very, very well. And then, of course, we always have our discretionary trades to be able to take advantage of kind of emerging trends in the market that, aren't part of like just a discretionary system. So yeah, let's see. Hopefully Instagram will tap us in here. Instagram always likes to wait for some reason. They like to wait till like the 15-minute mark to actually send the notification through. But since you guys are here, we can get going, get started. My daughter's trying to like walk in the background. She's afraid she's gonna be in the video. You can see her tiny body right there. So Zay will be joining us in a little bit. He is just, he'll be joining us a little bit after the start. And so one of the things that we focus on a lot, especially with our discretionary trades, is not trying to front run trends. A lot of times people end up like not participating in the final move of a market uptrend because they're trying to front run the reversal. And oftentimes markets can remain irrational for a lot longer than you expect because the market is very forward looking, and oftentimes they're seeing aspects of like market activity or economic activity or policy activity which we haven't yet seen. It's not yet into like the public information, but maybe happening at a higher level. And so for a lot of people, I know even in our group, we do trade a lot of short puts, and not a lot. It's maybe like 20% of all of our positions are short positions. But one of the things that people, didn't want to participate because they said, but I'm really concerned about the market turn. And I said, one of the things that I've learned, especially in 2022 and 2023, is that you are going to be really busy looking for the top and looking for the bottom. That what you miss oftentimes, even in really aggressive downturns, is that you end up having really significant bear market rallies. And so even when you're playing downside positioning like short puts or put credit spreads or diagonals or whatever it is that you may be setting up, you actually will continue to get the decay just because of the nature of the fact that even when the markets are downtrending, or that they, get these you get these nice mean reversions and bear market rallies. And here is my code. Instagram will let us join each other, or if they are going to, hello.
I need this thing. Hello, hello.
How are you?
Good, good, good. I'm at my children's godparents' house, so I'm in a different little
Ah,
setup. So,
okay,
yeah.
nice. I like the whiteboard in the background. I feel like you need to do some kind of demonstration for us.
I don't know. Maybe I will. Hello,
You
Joey.
could do a market structure review.
Do he got? Let me see. Do he got markers and stuff? I'm pretty sure he got markers and stuff. But yeah, we'll see though. But happy birthday!
Oh, thank you. That's very
Yeah.
kind of you.
I saw on we Facebook friends, so the
Mhm.
little birthdays and all that stuff pop up, and it was like it's Suzanne. I'm like, oh yeah, happy
Thank
birthday!
you. Thank you. We it seems that we get lucky this year because we were on Derek's birthday. Now we're on my birthday. So we just have to say, when it's your birthday, we need to just go live just so that we
Uh,
can be
you know what's funny
consistent.
is I think my birthday does fall on a Sunday this year. Let me go look.
We got to make this like a real thing. So it means every guest, I need to get their birthday information down so that I know.
It's a Sunday.
Oh, well, there you go.
Yeah.
Then
So
we need to set it up.
yeah.
So congratulations, because um, you have really been like staying the course on the overall conversation about the potential that Powell could come out and say something that could allow this market to explode. And here we are. Here we are. I know that you were looking for a little bit more of a potential drawdown before getting that next leg up, but overall, you were still, for the rest of the year, you still had, the vision that there was still going to be some more upside activity. And thank you to everyone for the birthday wishes. I sincerely appreciate it. Um, so congratulations, because honestly, I thought the markets had priced most of it in. So I was, and the funny thing is he never said we will do a cut in September. Just obviously everything he said was way more dovish than his normal like conversational point because he focused so much on potential contraction in the labor market. But I have to say, I was a little bit surprised how like explosive the move was. I wasn't expecting us to be 100 and something points up on the S&P. What's funny though is that 2 weeks ago we had a massive gamma level at the 6450, and everybody in my group was like, "There's no way we're getting there." But I was like, "Nope." The systematic trade is that where we have those clusterings, we have to do a calendar spread. So the whole week, that calendar spread looked like it was just on the verge of dying. And I said, it's like $1, it's like $1.20. Um, I can't justify taking it off because, truth be told, if we get dovish activity from Powell, who knows where this could take us? And that thing like exploded in value at the end of the day. So, those sometimes Gamma is just telling you like it is going to do what it's going to do, and you just have to believe it, even when you have to like hold your nose to sit through
Yeah.
it. Um, but yeah, I was in real time. I felt surprised in that first kind of hour of activity, and then yeah, I was like, okay, we're not even coming back down to even like test this imbalance, nothing. So tell me, what are you thinking? How did
So
you feel about it?
yeah, a couple of things, right? Number one, I can say I I wasn't surprised by the dovishness, and here's why I wasn't surprised. A couple of things. Number one, the market had, especially the Nasdaq, had started de-risking prior to Jackson Hole, right?
Mhm,
So people know coming into Jackson Hole, you had the Nasdaq on a 6 or 7 day losing streak, you had the S&P on a 5 day losing streak,
mhm,
and so you already had a good amount of de-risking going on into the event, right? So
mhm,
that did set up the probability that, hey, if you get a dovish Fed, you can see a pretty big rally, right?
mhm,
The other part the reason why I wasn't as surprised is because the Dow and the IWM, the Russell, there was a divergence there where they kind of were holding, it was holding up better than the NASDAQ was, right?
mhm,
They were more so consolidating than actually breaking down,
mhm,
whereas the NASDAQ was breaking down, right?
mhm,
So that was kind of a signal that, like, hey, there's a divergence there. There's something that is, you know, there's a setup there. That's just the way I'll take it. Not try to read too much into it. So that was a signal two. Signal three for me was how bearish the media and retail
mhm.
was going into Jackson Hole.
I don't
I,
know what they were, if people were expecting that he was going to come out and be like,
oh
actually,
no,
the
no,
BLS
everybody,
was right the first time around. The labor market is doing gangbusters.
Yeah,
Like,
like I think
let's fight.
so here was my gauge. And I tried to ask other people just to kind of just make sure I wasn't off center. But what I saw from my personal gauge was I was looking at this like this hit is almost too one sided. At least the this again, what I was seeing was I'm like everybody is thinking this guy's going to be a hawk. The media is pushing it, and a good amount of people that I followed on Twitter and the gurus and stuff. A lot of them were like hawkish, 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 and my personality is I'm a contrarian by heart. And so when I seen this one sided, I'm like, yo, we people need to really consider if this guy comes in dovish. Like this is too one sided, right? And so my spidey senses was tingling already there.
Mm-hmm.
So that was sign number three, was just the amount of negativity going into Jackson Hole. I'm like, he's going to come out and be dovish, right? He's going to come out and be dovish, and people are not going to be expecting it. People are going to get caught off sides and everything. So that was signal three. Signal four was and in hindsight, it's definitely clear now. But that jobs revision was the turning point. And as I get into what my takeaways was for Jackson Hole, he even said that was a big turning point. So my thing is, knowing that the Fed has a dual mandate and seeing how big that job revisions was, and how we're kind of getting to a point where even before the job revisions is people on the ground were already saying how it was such a tough labor market, right? It's very hard to find jobs, stuff like that. So that right there was a signal to say, hey, you need to be open to the possibility of the Fed shifting. Mind you, the reason that bearish engulfing candle did not get followed through was because after that NFP Friday, when we got that sell off August 1st, after that we began rallying because the market turned around and said, you know what, that jobs report, while it was bad, it renewed optimism about rate cuts. So the whole rally back in August has all been about better than expected earnings and optimism on rate cuts, right?
Mm-hmm.
So all we needed was for Jerome Powell to come in at Jackson Hole and give that justification that, hey, the market was right. And if that was the case, again, the setup coming into it was already, we've been selling down 5 to 6 days. So you could see a rally if he comes and provides that justification.
Mm-hmm.
So you had all of that. Now let's actually talk about what he said. I think so. I have spent pretty much this entire weekend. I re-listened to the speech to really like listen
Mm-hmm.
and break down what he said, because I have been telling my community this meeting is going to represent a significant shift. It won't just be a one-time thing. Like this is a review where they're talking about how they're going to change their framework for the next 5 years. So there
Yeah.
was going to be some significant things that came out of this.
Mm-hmm.
This is not just I know there's talks of, oh, this was just a dead cat bounce. No, there are some things he said that shift how the entire trading environment will be moving forward, right? So takeaway number one, the jobs market is now the top priority for the Fed. No longer inflation, right?
Mm-hmm.
So what that means is NFP will now be the number one market mover, as well as the top volatile event moving
Mm-hmm.
forward. So
That makes sense.
this first September jobs report, it's back to
Mm-hmm.
NFP in that market mover, right? Uh, that's the first takeaway, right? They're now shifting their dual mandate focus from inflation to the jobs market. That was the
Mm-hmm.
first thing. Number two, to kind of further cement that they're going from inflation to jobs, is that he explicitly stated the Fed is now taking a softer view on inflation. They are willing to budge on that 2% target.
Mm-hmm.
They are willing to look at tariff impacts as a one-time thing, and they will look through any. So if we get any inflation reports moving forward that are hotter than expected, it may shock the market initially, but I would expect that gets bought, because the Fed is no longer stuck to the 2% target. They are now willing to budge on that mandate. That is And not only that is a big shift because he was saying that as they move forward and get into these new dynamics and new workforce labor, that this is, they now see that the job market will not necessarily impact inflation like it is. So now, they're willing to budge on this 2% average target. That is
Mhm.
major, right?
Yeah. I think
The
one of
third,
the other aspects, oh, sorry, I didn't mean to cut
oh
you
no,
off.
go ahead.
Yeah, I think one of the other aspects is, in recent years, the Fed has tried to do a lot of different triangulating to find the neutral rate on unemployment. And every time they try to like figure out what is the neutral rate for unemployment, there's no connection to like what is actually happening
Right.
and what the unemployment rate is. And
Yep.
so I think that this also is troublesome for them because
Yep.
they can look at unemployment and say, well, like the number is high or the number is low or the number is stable. But to find any correlations to that number have been really difficult because there have been times where unemployment has been extremely low and inflation is extremely low and they can't get inflation back up. Then you've
Yep.
had other times where unemployment is really high and you would expect inflation to come down, but then inflation has ticked all the way up. And then you're like, wait a minute, the correlations don't work. And so the Fed has kind of realized that their understanding of where the unemployment neutral rate is almost irrelevant to like the whole kind of conversation. And so
Yep.
because of that, they keep leaning on fewer and fewer and fewer data points or data sets in order to kind of extrapolate like if they have to lean this way or this way. And so so I agree that like this employment data has become exceedingly important. The concern I have, though, is that the birth rate is falling in the United States, and it has been for a really long time. And we basically killed immigration. We're at like negative immigration numbers right now. So I'm a little bit surprised that what the employment rate is actually as important as it had been when you had a lot of immigration, you had a lot of competition, and you had a lot of people coming into the labor market. And I think that those data sets are changing quite significantly just because of this, like just the statistics and the like new social demographic that we're in. But
Yep.
I didn't want to cut you off because you were like in the
No,
stream
no,
of
no.
things. So.
Good. Good. And I mean, and to just further add to your point, you have that changing dynamic that you just talked about, but now you also have to add the impact of AI, right?
Mhm.
And how that's changing you know, in the beginning, technology changed the blue collar structure, but now you have technology changing white collar structure where you're getting rid of
Mhm.
a lot of admin jobs and help desk jobs and things of that nature. And so, the Fed. So that segue into the third point, which is their policy framework change overall, right?
Mhm.
That was my third point is that, and you kind of nailed it with, you're right, the Fed does have a challenging time with balancing these new dynamics. And this is why the new framework is they're open to taking a more flexible approach to
Mhm.
inflation and how do they handle the job market and making sure it doesn't get out of control. And so ultimately what he said was that being that we are in restrictive territory, we now, before, but he basically, I mean, to summarize, he was basically saying, look, we are in restrictive territory. Before this thing gets out of control, it may warrant us making changes. And
Mhm.
of course, that was the initial headline that came out, and that's why the market reacted so suddenly, is
Mhm.
because the market heard um, may warrant changes to the policy. And once they heard that, they automatically took that as rate cuts coming in September. But as you dig in deeper and digest it more, you really start to see the real impacts of what these changes are going to do, which if you really take a step back and look at, okay, what really rallied on Friday? Who had what industry or sectors or industry had the best performance? If people look, it was small caps, followed
Mhm.
the Dow, followed by the S&P or the ES,
Yeah.
followed by the Nasdaq. right?
Hmm.
A lot of, if you really look at it, like Apple was kind of like it was barely up on Friday. Microsoft, like the mega cap stocks weren't really up. The things that got the biggest boost were
Hmm.
like small caps, regional
Hmm.
banks, biotech, industrials, financials.
Hmm. Yeah,
Uh,
financials looked amazing. When I was looking at the
yeah,
chart, I was
like
like,
you, right.
yeah.
So if you really dive into what got the biggest money rotation Friday, it was the sectors that I just named. And so I say all that to say to wrap it up. Yes, like you said, I was looking for a bigger pullback. I did think that the market was a little complacent, but this is one of those moments where macro change trumped technicals and other
Hmm.
factors.
Hmm.
And have a significant shift like that, you have to, as a trader or investor, you got to understand what's the dynamic. And this is why I always, kind of preach. I don't think the market is just a technical thing, a fundamental thing, or a macro
Hmm.
thing. All three of these things
Hmm.
play its part, and at different points, each one has a different weight and kind of can lead the market. So what I think we saw on Friday was a dramatic macro shift. You had now everybody's gonna have to make their adjustments. So you're gonna have to let that play out, and then after that, you can start to make your technical adjustments and fundamental adjustments.
Hmm.
It may not be as much as you need, but uh, yeah, I think we are very much in a risk-on environment for the rest of the year. Uh, I'm at a point where I'm asking myself, if I mean, is that all the pullback kind of we get? Is it only going to be a 3%? Or, are we gonna? We may not even see a true 5 or 10% pullback for the rest of the year.
Hmm.
I
Yeah,
think
I
I think
think one of,
or somebody mentioned it that what if that 20 some odd percent drop
hmm.
early was the correction, and
Hmm.
going forward, all you get now is a 2 or 3% pullback, and then that's it, and we just keep
Hmm.
rallying, rallying, rallying. I think that I guess this is the last part I'll say, and then we can go on from there. Is the next part that I had to ask myself is, okay, now that Jerome Powell and this Jackson Hole speech has come out, what's how does that change economic reports and things like that going forward? Okay, so once we get, most people, a lot of people are going to say, oh, well, September comes seasonality. Not so fast, right? Because what happens if that job report does come in weaker? Okay, you may get the initial shock, but now that really cements a rate cut. And if it
Hmm.
is worse enough, now we're not just talking a 0.25. It may
Hmm.
justify him doing a 50% cut,
Hmm.
right? And once the market realizes that, they're going to get even more bullish.
Yep.
All right. Then you think about the following week, you get CPI. It doesn't even matter no more,
Yeah.
right? If
Because
it's hot, it
inflation
doesn't
isn't,
matter.
yeah.
I just told you, and this is why people have to really take in what he said and not get caught up in emotions and, oh,
Hmm.
well, inflation's still going up, and he already told you that at the Fed they acknowledge the inflation may continue to rise, but they see it as a one-off, meaning it don't matter.
Hmm.
Sorry, it won't. Again, you may get an initial shock, but the market may come in and buy that dip.
Yep.
And that's the second week. Then you get to the third week of September. That's the FOMC. At that point,
Hmm.
if job data and inflation are what they need to be, we will probably be at 99%
Hmm.
probability of a rate cut. That's also the key meeting where we'll get a SEP update. So depending on that data, we'll know, well, hey, are they going to do maybe two cuts at the end of the year? So now we get
Hmm.
three this year. Is they just going to stick to the two? We'll get a new dot plot update. And if that
Yeah.
shows even more dovish Fed, you just
Yeah.
continue to pour more and more fuel
On this
on
fire.
this.
Yeah. Yeah, I
And
agree. I think one of the other things that people also forget is that there were long durations of time in the U.S. economy where inflation was so low that it was impacting the growth of the overall economy. And so, yes, they want to be cautious about inflation, but the reality is that if tariff in the tariff impacts is transitory, they could end up putting themselves in a situation where those transitory effects then just lead to inflation, popping up, but then coming back down. And then they end up with this like kind of negative inflation, which is not great because then you have reflation and they don't want to go there. And I think they've kind of come to the point where they realize that that's not the likely dynamics anymore,
Yep.
just because of how much society is changing. Um,
Absolutely.
Part of the new averages that they were testing, so like one of the things that I think people wanted to hear a little bit more about is that they were revising like the 5-year way in which they measure inflation. And
Hmm.
so one of the things that they talked about is that they were going to do an upside averages, but no longer a downside averages. So if the if the inflation rate kind of ticked up, they would add that to the average. But if the inflation dropped below a certain amount, that they would consider it like an outlier and they wouldn't count that as part of the averages. And then they decided that they're actually not going to do that anymore. And I think that was scaring people that their numbers would always be hotter than the reality because they were always like including the hot averages, but never including the cooled off averages. And their idea was that when you have cooled off averages, those often are outlying events. So but it just meant that they're kind of the way that they were looking at the data was always hotter than it, it really was ever going to be.
Hmm.
And so I think that in the last weeks, it's become clear that they actually don't really like the methodology they were thinking about moving to. So now they're not going to move towards that, but they're going to still be moving towards something else. But what that something else is wasn't entirely clear either. But
Right.
like you said, the end all and be all of the conversation was that inflation isn't the area that they're concerned about. The labor market is, and they've just not given that area as much concern because it
Right.
seemed to just be doing so well
Right.
forever. So I agree that NFP is going to start being really dynamic in
Oh yeah.
comparison to like PCE and core
Uh,
CPI and things like that. And it's funny because I was listening, like, I always have like YouTube going in the background and something came up and the people were talking and the YouTuber was saying like, oh, I never trade NFP Fridays because they're just so dramatic. And I was a little bit surprised. And I was like, man, you must have been really trading those NFP Fridays way back in the day because actually they haven't been that dramatic because of
not
the fact that the Fed hasn't cared about them.
correct. Right. Right. Right.
So I think that you're right that a shift could be coming surrounding like what points are actually like more impactful to the markets. So I I know that now people are looking at sector rotation.
Yep.
They're looking for the impact, like further impact from the Genius Act. They're looking for new impact in crypto. There's like a new kind of revived energy about what could happen in like energy and raw material and pri oh, rare earth materials, just
Hmm.
because now, I mean, the kind of act of government taking a stake in Intel has kind of changed the conversation a bit. So, like in this, like going forward from this situation, what sectors are you looking at?
So, good question, right? I was doing, after I had taken some time to really understand Powell's speech and the possible impacts, and I dug into some sectors. So, the area, damn, I wish I had my notebook on me because I wrote it down. Okay. Off the top of my head, what I would say that what I'm paying attention to now is number one, right? Starting top down approach. Small caps need to be on your list, right? Small caps have to be on your list. Now, something that I found pretty interesting is not just any small caps, right? So there's a few, like you have IWM, everybody knows that, but
Hmm.
also have like IWN, which is I think
Hmm.
like the Russell Value. You have
Yeah.
like
Hmm.
IO, which is like the top 200 or top 2,000, and then there's another one that is the top 200 in top 2,000. So there's an IWO and an IWY. I'm not sure which one is which. I forgot. But so don't just. I mean, you can take IWM and be good with that, but if you really want to get really specific, dive into a little bit deeper, right? So that you start there, small caps. The next
Hmm.
area that's going to really benefit is definitely going to be industrials and regional banks.
Hmm.
I hesitate to say this area, but it may be an area that really benefits, and that's biotech. It's just lags so goddamn long. But biotech actually, this might be what biotech needed, right?
Hmm.
So, and when you think about what small caps makeup is, it's very heavy regional financial services and biotech companies, right?
Hmm.
Then you have industrials, right? Industrials is definitely going to benefit a lot from this shift. So that's going to be your deer, your cats, name Boeing,
Hmm.
right? If you take a look at what performed well on Friday, you'll see like URI killed it. There was a
Hmm.
couple industrials that absolutely went ham. So
I've been
industrials, fine.
surprised by the move, or not surprised, but we've been playing Home Depot, and that has
Oh,
just
yeah,
done
that was what I would say. So discretionary
phenomenal.
area, right? Discretionary is going to be another area where you're going to see a big beneficiary, right? Because guess what? They start cutting rates, people got more money to spend. So
Hmm.
guess where they go? Discretionary. So yeah, so industrials, financials,
Hmm.
discretionary, small caps, and of
Hmm.
course tech, right?
Hmm.
Tech will
And
still
I
do
don't
well.
know that all discretionary is going to do well, but I definitely think anything relating to home improvement, because if people are thinking that they may actually be able to sell their house, because people might actually be able to get mortgages.
Hmm.
I think that we could see a lot of home improvements that people
Hmm.
haven't been spending their money on. Because I
Oh
know
yeah.
a lot of people are like, why am I going to start doing renovations now if I'm not going to sell my house for 3 or 4 or 5 more years? Because no one can afford to buy my house at
Well,
this price.
hear me out. To your point, though, and talking about Home Depot, think back to what their CEO said about what the consumer trend was. A lot of people held off on home improvement projects because interest rates were high. Well, if we're about to get lower interest rates, now you're going to start to see a lot of people start to do those delayed projects
Hmm.
that they've been holding off on, because now rates are going to be lower, right?
Hmm.
And to your point, the Home Depot was one of those big beneficiaries on Friday, baby.
Even
Because
so, there were a couple that we talked about even on the live a couple weeks back, and I talked about like RH, Zillow. Zillow was doing really well. Um, that's really up.
okay,
I think, Home Depot is another one that had like another, but anything relating to the home builders and like
yeah,
renovations, I think that area, that part of overall discretionary is going to do
pretty good.
really, really well. So
Yeah,
um, even Open has done
yeah,
super well on this idea that like is AI really going to help with like home sales and all this kind of stuff? It's in fact yet to be seen, but
yeah.
the
People are getting ahead of
like
it. Yeah.
playbook is kind of sitting there to be tested. People are willing to check it out and see
No, yeah.
how,
So I think those are the sub-sectors, or those are the sectors or areas, at least that I will, or that I've honed in on.
Mhm.
And I think, when it comes to tech, you can always stick with your big dogs and them, but what I will say is that we can also now be entering a period where, and I want to make this very clear, where you have small caps and just other sectors outperform tech. That does not mean tech won't perform. It
Hmm.
just may get better gains or higher returns in other
Hmm.
areas as they play catch up
Hmm.
to the tech, right? Because if you start to compare valuations and just how far those spreads are between the other 493 stocks versus the Mag 7, there's a very big gap. And so they can
Hmm.
a lot of ground as the Mag 7
Hmm.
consolidates, maybe gets less gains while still getting gains. It just may not
Hmm.
be much. So,
Yeah.
yeah.
It's how I was, and even just like piggybacking on that idea, there are a lot of times where like sectors are kind of dropping into the trash can, and people are like, oh my gosh, because it's gone down so much, it has to come back up. And you're like, this thing could be basing for like 2, 3, 4 years, or the
I
company has some other fundamentals that are just not working out for it. But
right.
an area that has performed exceedingly well, coal. Coal has had
Oh,
like just, yeah, like the coal
yeah.
sector has done.
Energy needs. I think somebody was telling me about that. Like it doesn't even at this point. These a lot of these data centers and them, they just try and get their hands on any and every kind of energy that they can, whether it's coal, nuclear, whatever.
And
So,
now that a lot of like Trump is rolling back a lot of um, regulations, people are like hardcore speculating in
yeah,
coal and in drilling because, I thought that like the whole energy sector would do well just because it's been basing for so long
yeah.
and because of the energy needs. But when you actually like dig down into the sector, it's like coal has had like a 90% move in comparison to the others. And it's just like, seriously?
So you said it's I'm gonna have to look into that. But on the flip side, right? We talked about names that will benefit. I think some areas that we may have to kind of just be cautious on. Well, not cautious on. I'll say these are the names that are least likely to benefit from the changes that the Fed has talked about, which are consumer staples,
Mhm.
healthcare, and some parts of energy. Right. So I guess I would say outside of the nuclear data center type of energy
Mhm.
play, not all of energy is really participating because I mean, yeah, think about it. They've been keeping oil pretty low, so that doesn't necessarily benefit your Chevrons or Exxon
Mhm.
Mobil's. But I think about with rate cuts, and you have to think about it like this: with the rate cuts and stuff, it's going to be a very heavy risk on sentiment. So while consumer staples, healthcare, some may perform, they just may underperform.
Mhm.
And I don't know if this is at this given time, this may not be the best time to be like ultra defensive. Regardless of what
Mhm.
you think, right? You have to go with what the market is actually doing. And if you actually look at consumer staples and healthcare, they have not actually, on Friday, I want to say they was down. Well, no, they might have been up. But I mean, no, I think Walmart was down on Friday. I think
I
Costco,
don't know. I'd have to look because I mean, I wanted to get into Walmart and then I just totally missed the move. And I was like, oh,
for
okay, well,
for upside.
the upside move when it
Oh yeah,
had that like breakout a couple weeks ago.
you buy your charts, right? What
Yeah,
uh what did Walmart and Costco do on Friday? Were they up or down?
let me see. Let me get this trading view back up. Hey, where are you?
I sworn I thought they were down.
No, it is possible. But Walmart had a breakout move previously,
Yeah,
and
and then they
I've
and
I've
they
been saying like, oh, I want to get back into Walmart, but then I just totally missed the move. It happened, and I was like looking at something, like thinking about something else. But on Friday, let's see. TradingView sometimes likes to be
oh yeah, it's
slow
been
with me. I really don't know what's happening. Okay, so Millennial Properties said Walmart was down. So
Walmart.
there you go.
I'm not even seeing none of the comments either.
Oh, you don't. Some that happened another time too. I think Mark couldn't see the comments. Yeah, Walmart gapped way down. It kind
Okay.
of gave back that squeeze, so it was down five
And
dollars and then kept dropping.
Friday?
I'm sorry.
Was Costco down Friday?
Let me see. Well, Costco, man, they've been running like for years. It's um down to 958.
So it was down Friday though, right?
Yes.
Yeah. So that right there tells me be careful with staples. If your best two performers in staples are down on a day the market goes up to almost 2%, clearly
Mhm.
money ain't going in that area.
It's true. It's very true. Yeah,
You know, like
I
go
think
ahead.
that there are a lot of like it's funny. A couple weeks back, I was telling everybody like two areas that were doing really well, gambling and tobacco. Those two areas were just doing like I was
Yeah.
like, people obviously either people are so worried about their money they're ready to go gambling, or they feel so good about their money they don't mind losing it in a casino. But those
Yeah.
gambling stocks were doing like were actually doing better than I expected.
Yeah.
And I think that an area I think is going to do really well are those like mini caps, like the Rigetti and Lemonade and APLD.
Yeah.
Those like really, I don't know if any of those are actually in the IWN. I think they're too small yet to be
No,
part.
they
I think
they might.
there's
If they're not in the Russell 2000, they're definitely in the Russell 3000.
okay, but those companies, I think that they're small enough that people feel like they can participate and speculate. I
Hmm.
think and they have like a good like business case and use case.
Hmm.
I think those are the areas that you want to be looking for like that really massive upside potential. And some of those companies have come down from really like higher price levels.
Yeah.
And so you don't have to do price discovery. I think people are kind of sleeping on a lot of those stocks that they're not leaning in heavy to them, just because their expectation has been that, like with everything else, they might not outperform. That they've been performing really, really well, actually. So um, I'm not sure if there's another sector that, or not sector, but like, something else that you guys are looking at that's been performing well for y'all. Because I know you're also doing the YouTube channel. So everybody remember that Zay has his own futures channel. You guys can hop in. And Andre is in the chat as well. So it's one of
I
his co-hosts.
can't miss another, so I don't know what's been
He
popping.
kept calling you the Maverick.
Yeah, so we read this book called the 20, what is it? The it's like the 20 personalities that make up your trading psychology, I think it is. And they make you take an assessment, and based on your assessment you get a certain archetype. And so the archetype that I got was called it's called the Maverick.
Uh,
So
okay. What's the name of the book again?
the 20 personality types that determine your trading psychology by Steve Burns and Holly Burns. Really good. We had a book club on it. If you are, so I would say if you're a trader investor, get the book, take the assessment, because it really helps you understand what environments you operate best in, which environments you may struggle in, how you can get better, things you can do it's very actionable.
Hmm.
I would say if you are like a mentor or a trading coach, this book is good for you, because when you get new clients, you can have them take that assessment, and then the book gives you how you should coach them.
Oh,
is
that's interesting.
Yeah, it's a great book. Like, it was a
Hmm.
great book. So we did a book club on it, and I had a good amount of the runners all take our assessment, so we know all the different type of personalities
Um,
we have, because like there's four major. Everybody has a tendency, right?
mhm.
Some people main tendency might be they are very systematic. I would say you probably will fall under that systematic, where you are like, I'm gonna follow my rules, I'm gonna stick to my system. I don't care about my gut, none of that. I'm just gonna follow my rules.
Because
That's it.
my gut has made me,
Very clear
it doesn't
cut.
make me lose money. It makes me miss some of the best opportunities.
Have some very systematic people, right? Dre is a very systematic person. If he's in the chat, Dre was very systematic, right?
I'm fist bumping you from far away, Andre.
Right. Then you have people whose main tendency is they systematic. strategic, right? That those are the folks that sometimes can overanalyze things,
Hmm.
but they definitely analyze a lot of stuff. Like they're very strategic, they're adaptable. You know, they think from a very high level perspective. Then you have people who are intuitive. That was me. Like I sometimes like I'm very. So the Maverick is heavy, intuitive, and strategic. Like you almost
Hmm.
are like 1A, 1B. Like when you take the assessment to get the Maverick personality, your intuitive and strategic are basically the same score,
Okay.
right? So that's kind of how, because I am intuitive, but at the same time, I'm very strategic, right?
Hmm.
And then the last one is, fuck, what is it? It's strategic. It's intuitive,
Andre, do
systematic.
you remember? He's in the chat, so
Yeah,
he
he might
maybe.
be
So there's Maverick, strategic,
and
uh,
intuitive. So there's
intuitive.
four. So
Hmm.
what happens is four
Main
tendencies,
ones.
right? And then if you have a main tendency, but then you have a secondary, you kind of have like a blend, and that creates a different type of personality. Because you got somebody
Okay.
who's like totally dominant, systematic, and score low on everything else. But then you can have some people who are kind of even across the board. You got some who score higher in different areas.
Hmm.
And I can't think of the fourth one. I know it was. I wish I had the book on me, but I know it was system. It was systematic, intuitive. What was the other one that I said? Strategic,
Strategic.
and there's a fourth one. When I get home and look
We'll
at the book,
figure it out. So
but there was.
somebody did ask in the chat, do you think that Rectember will play out? So that's Shop Girl BK. So we did mention that the reality is that because of the drop in April that was so aggressive, that there is a chance that some of that kind of downward activity was pulled forward. And just because of the fact that we have moved into a completely different policy setting, that the energy from that policy change from Fed Chair Powell, that they have now become quite dovish, that could continue to pump liquidity into the market. Now, it doesn't mean that every sector is going to benefit from those potential rate cuts, and that every sector um, will get the rotation of money. But usually this would have been like Rectember is usually really hard on like tech because they've just had massive run-ups, especially through July, and then they're kind of flattish in August. But they not all of the tech sector has experienced that massive run-up. And some of them, when you compare them to the beginning of the year till now, their actual gains are quite modest. Now, that's not for Microsoft, that's not for Google. Those have had, like or Meta, they've had really nice positive runs for the year when you look like from December 1st, December 31st until now. Um, but there are other areas of the tech sector. I think things like software has and cybersecurity has just gotten demolished. I think part of that has to do with people don't know what's going on with AI and how that's going to impact those sectors. But I think also it was a lot about for like companies, how much more CapEx can
Mhm.
companies deploy to the like to upgrading their software and upgrading their cybersecurity if interest rates are going to be continuing to be at this level. So I think there are sectors that could do well because of the fact that just rates being guaranteed to come down is enough for them to get positive energy. So September may not be the disaster that everyone was looking for. Also because usually in like after August OPEX, we like we should be seeing that kind of like consolidation and kind of rolling over, but Jackson Hole basically
Change
changed
that,
that.
baby.
So, but I don't know
Yeah.
if you like you wanted to say more about Rectember.
No, yeah, I don't. No, I don't see a wreck timber. Um, we kind of, we no. I mean, to keep it simple and keep it short, no, I don't see a wreck timber. Do we get small, modest pullback? Maybe, possibly, sure. But if you're thinking At this, I have to be honest. At this point, I've pretty much X'd out the probability that we see a 10% correction the rest of the
Hmm.
year. I doubt we
Yeah.
get one.
Yeah.
Uh, doesn't mean we can't get a 5%er or a 3%er, but that will be probably it because we probably about to see FOMO. We probably are about to, see a lot of chasing from funds. And so by the dip crew is they about to just keep winning.
Hmm.
you know, like I don't,
I
so
think
no,
the other thing that that we haven't actually talked about is Powell like came out and he just started breathing. He didn't even say anything yet. He's just like walking up and like short duration bonds dropped like like they dropped massively. And I think that a big part of the like a big part of the September sentiment was the idea that the market has run up so hot. Now I might just take my gains and then rotate that into bonds that might give me an X amount of return. But right now, like bonds, especially on this drop, are giving you garbage returns. And then when you compare that to the fact that the dollar is still dropping in value, you're actually ending up with like negative returns on bonds. So I think a lot of people that would be like, oh, I'll sit out the rest of the year and just like go into something like a 5%
they about
return. Like
to
if
act.
inflation is about to be 3%, you are not enjoying 5% with the dollar down like another 5, 6% by end of year. So I think that's another thing that's going to significantly shift what happens in that September sentiment, like into that quad witching.
I think
His
no.
tie, his tie color gives it away. That's what Sasha said. Absolutely.
That
The
what happened?
tie, his tie
Oh,
color, Pal's tie color
yeah.
always gives people like,
What I'll say is, yeah, I don't see a rectember, but I could see a sell the news event when he does cut the rates in September. So I do have a little bit of a mindset that we could just continue rallying all the way up until the rate cut. And then when you get the rate cut, you'll probably get a little bit of a sell off, maybe just because market has reached a point where it needs a little bit of a cool off. But even then, it'll be brief, and then we get right back into October and earnings season, and the market will likely give you that one last bump into the end of the year, and then once we get to 2026, we'll see where things go from there.
yeah. Somebody did bring up a good point. Sahib, he said, but NVIDIA earnings can move semis and the overall market combined with the actual rate cut in September. So what are your expectations actually for NVIDIA earnings? Because that's kind of
So that's
the last thing that people are waiting for.
yeah, that's Wednesday.
Yeah.
Um,
What are your expectations?
um, Nvidia goes to 194. They crush expectations once again, and everybody that is pushing this bearish narrative or concern over the China stuff, it'll be overblown. Nvidia will impress again. It will go to 194. It will push the Nasdaq to new all-time highs, and August will end on a very high note.
There you have it. That's going to be the next real cut right there.
No, I like if I'm being dead serious. That's how I feel.
NVIDIA
Like
always does that. It runs, runs, runs. It gives you an
right.
explosive,
So,
and then
I'm, to be honest, I did a little bit of prep, and everybody's like, well, the Nasdaq is lagging, right? It was the one that didn't get the bump. Okay, what did I just say before? Okay, yeah, we may see small caps in them outperform, but that doesn't mean tech won't perform.
Mhm.
So, okay, yes, tech was the only sector and QQQ was the only sector this week that didn't make a new high. But guess what? they are just waiting a week because they had the catalyst they need the following week to do it, which is Nvidia
Mhm.
earnings. So go ahead, let money rotate into all the areas that are beaten down, get you big gains there. And then we come into this last week where the main catalyst for this week is Nvidia's earnings on Wednesday and then PC on Friday, which again, I think PC will be irrelevant since Jackson
Mhm.
Hole. So, hey, look, Monday, Tuesday, we might get a little consolidation, maybe a little slight pullback. For those that follow the VIX rule, the VIX was negative by negative 14% on Friday. So there's an 85% probability that you could see a down day Monday, Tuesday. If that happens, I think that's just early weakness. And when NVIDIA reports on Wednesday, I mean, once again, think about the setup.
Mhm.
You get this nice rally on Friday. You come into the week, it's a little cool off. People have digested what Powell said. Then by Tuesday, everybody will realize what Powell said is legit, which is probably a little bit too late by then. Wednesday, Nvidia is going to come out and crush all the concern because you know what the narrative is going to be coming into Wednesday. Well, everybody. It's so funny because in the trading world, I just don't understand it. Why are we as people just sometimes so negative? We always try to guess what's going to take the market down,
Mhm.
or what could stop this awesome rally, instead of just saying, again, the other side. What happens if Nvidia comes out and actually crushes it, and the concerns about China are overstated, and then what? The market's going to keep rallying, right? And then
Yeah.
you are not caught off sides, right? And
Mhm.
so I have once again, gauging the sentiment and all the things that I'm seeing. I see a lot of skepticism where people are kind of like, okay, well, Powell didn't drop the market, so maybe it's going to be Nvidia, right?
Mhm.
Those bearish people who just cannot let it go always
Mhm.
move on to the next thing. And once I start seeing the next, it's always the next thing, and none of it's working. It's like, bruh, I'm sorry, you just going the bears just gonna have to really do something
Mhm.
crazy to prove it, because now
Yeah.
every little thing that they count on gets ate up. They get bought up. So, of course, they may push the narrative. What happens if Nvidia says a slowdown? What happens if this China thing, blah, blah, blah? Nvidia's going to come out. Jensen Huang's going to do his thing. He's going to say, hey, look, uh, yeah, we made these deals, but our business is still great. AI demand still booming. We gonna come up with a new chip for China. All is gonna be well. And
Mhm.
then guess what? Like I said, Nvidia's gonna boom,
Mhm.
and they're gonna surpass expectations. And everybody that had those concerns are like, oh well, yeah, it wasn't too bad, right? And
Mhm.
then here we
I think
are.
also, I think that there's been for decades, like hedge funds and money managers, they have only ever been competing against each other. And they've not been really competing against like the retail investor, because the retail investor was never savvy enough to do much more than just buy and hold. And
Mhm,
options were not liquid enough to like really focus on that, like the way that we're doing now. And it's
mhm,
funny because um it, like you know um a, a person that came into our Discord has a background like working with hedge funds and stuff. And they started like looking at all of our different systematic trades and analyzing, doing all these analytics, like what's the Sharpe ratio and all this kind of stuff, like things I would never do myself because I was just always looking at my own returns. So I'm like,
yeah,
if this thing is producing me X amount of money, and it's doing it consistently every single day or every single week, depending on what the strategy is, then I know that like, okay, month over month, my members should be green. And and they're like, yeah, but you should be looking at the data. And so it's funny because then they sent me an interview, and I'm not going to say who the person is, but he's like a super famous money manager, and in his speech, he was talking about the fact that he had like a 3 Sharpe ratio and a 4 Sharpe ratio. And we have a 9 Sharpe ratio, which means that like we're exponentially outperforming this hedge fund. And
right.
I was floored. I couldn't believe it. And then I was like, retail investors have started to become extremely savvy,
Yeah.
and money managers have gotten away for so long with not outperforming the markets in significant numbers. And I think Ray Dalio, I mean, his is like, he's super famous for doing 30% a year. I think if somebody like me or you were coming out and like, I'm getting 30% a year returns on my investment, people would be like, so you're basically just doing covered calls on your shares or you're just doing some extra leaps. Like people wouldn't really be that impressed with those returns. But it's hilarious to think that actually that was like the outstanding performance that like year over year you got
Yeah.
30% return when markets were doing 15%. Like, so you basically doubled the market returns. Like, is that really that impressive? But so in this, I think that now there's a massive amount of money that individuals are just deploying besides money in like money like money market funds that have not deployed the cash. They've not participated in this April move because the
Yeah.
amount of shares that like hedge funds and money managers, like how much they sold into the April tariffs, but never got back into the markets. That
Yep.
it's
And
like that's why they need to be bearish because they need to terrify everybody else that's
yep.
like, nah,
Yep.
I'm gonna stick to my rules. I'm
Yep.
using a Bollinger Band, I'm using an EMA, I'm using a whatever the thing is that they're using, but they're like, I'm gonna stick with my thesis because you're
Yeah.
not beating me anyways. So why do I care what you think?
Right. Right. Right.
Which is kind of crazy. Well,
No. Yeah. Good point. No, what were you gonna say?
no, so I think somebody else asked a question. People are too bearish on SaaS and software stocks because of ChatGPT 5. Will be interesting on how endings of Now, CRM, Adobe, MongoDB will do. So, oh, earnings. I think you wanted to
Yeah.
say
They're
how earnings
the amount
of
of money.
those will go.
Yeah.
So, yeah, like I've been saying, I think that those companies, they have just been shat on for so long. You just that and they're real companies. It's not like
Yeah.
I'm asking you to believe in AMC. I
Right.
mean,
Right.
these are like legitimate companies. Okay,
Right.
maybe Adobe is a little bit more. I do find Adobe like it's more aggressively facing off with AI, but I think like now CRM,
Yeah.
MongoDB, FTNT, Snow, all of those are Marvell. I think that they have really been like crushed in this new market environment. I think they have a lot of potential to get like this squeeze and pop. So I'm not bearish on them. I just think you need like whatever your structure is, you need to be cautious because they are still interfacing with the implications of AI. But are these companies gonna
But no.
like disappear?
So I wanna kind of say something that you said, and
Yeah.
then I a little bit of a time check. But you said something earlier that was key, and you said like companies were a little skittish about how much more capex spending they would do when it comes to cyber and SaaS companies because of the interest rate environment, right? But now that that cloud is that has that hangover has gone away, this is probably we're in a risk on environment now, so this is going to be that chance for you to get into the cyber SaaS names because they're at good price levels, and now that that overhang is out of the way, to Suzanne's point, companies now have clarity and can go back to the type of spending that they need with those companies. And so go into the winners, the ServiceNow, the CRMs, the Snowflakes, the CrowdStrikes, the Marvels, the Palo Altos is going to be a good play. Now, again, we said it. Tech is going to be a good area for you to go to, right? And they still will perform. You may just have to be a little bit more selective, but I think you made a good point when you said that earlier that
Mhm.
that was one of the hangovers when it came to the SaaS. Not only the Chat GPT thing, but I think that part is highly overstated.
Mhm.
Like Chat GPT is not about to put ServiceNow out of business.
Yeah.
You know what I'm saying? So now that this interest rate overhang is out of the way, I think that does clear the path for a company like ServiceNow, CRM, and for them to start their rally back and for them to get back on board.
I
Yeah,
absolutely agree. Well, I
yeah,
do know that it's top of the hour and you are with your kids, and
yeah.
I'm so thankful that you gave us your time today because it's always nice to interface with you. And thank you. Last week I took off because my eldest came in from the UK, so it's kind of a long day for us. And then I
Yep.
realized I don't think I'm going to be alive for I'm a
But
bit exhausted, but so it was great to be able to have you this week. And for those who aren't following either of us, or like you're following one but not the other, you definitely want to follow us because Zay is doing his the futures stuff on YouTube. You want to be following up with that. We are doing a range of Sunday lives with different
yeah,
guests. Derek will be coming back. Moody Bugs is going to be joining us. Gene Austin is going to be talking about being bank ready and government contracting. And we also have Amit that's going to be joining us for those that were part of like the whole come up crowd back in 2020, 2021. Know a lot of you guys know him already. So, we have a lot of really great people that are going to be coming to join and
nice.
just discuss different aspects of the market. So you don't want to be missing these Sundays because, yeah, I think that
Part
I
of it.
learned so much from you guys. So I love having y'all on because you're always challenging like what I'm looking at or why I'm looking at something. So I think all of us really benefit from the education. So thank you for joining and give both of us a follow, friends. And
Yeah.
if you missed the beginning, you can watch this when it's posted.
And she has
All
some
right.
clips.
I love the clips
I
because I'm
love
always like,
before I go, the one clip that you shared, I looked at that. I was like, "Holy cow!" Like that was good timing when we talked about the market getting to like 64, 56, 64, 80, and then pulling back. Like it literally did that. We got there, we pulled back, and but then of course Jackson Hole changed everything. So slightly off a
but
little
you
bit, but
said that that was so likely to happen that like even that Powell could come out and just say that he was resigning. Like, I mean, he could
yeah.
do anything that would just explode the
So
market. So
array of things that there was possibilities, and I think he went with the one that a lot of people didn't really count on, which was him being a little bit dovish and changing things up. I think a lot of people, like I said, at least from my perspective, I saw a lot of hawkishness, but yeah, but no, Suzanne, this was a great session once again. Like you said, I always enjoy talking with you about the market. You have a lot of great insight and knowledge, and people definitely should be tuned in and tapped in. But yeah, I think we'll be back at it. Let me see. Next Sunday is what, the 31st or something like that?
yes.
I think I have a wedding to go to that day, but then the following Sunday will be my birthday, but I'll be free. So,
Oh, good. That we can wish you happy birthday. I
yeah,
like this. It'll be like we have to do this for all of our guests.
yeah,
Make
yeah,
sure
yeah.
your birthday's on a Sunday so we
Yeah.
can wish you in real time happy birthday.
I could definitely be back. But in the meantime, again, happy birthday to you. Hope you enjoy your
Thank,
birthday.
thank you.
Uh, Definitely wishing you all the best and all the success. And yeah, I will see you in 2 weeks.
Yep. All right, friends. We will see you guys and have a wonderful trading week. And hopefully, you're able to utilize what we've talked about to make more money and be
Yeah.
better investors. All right. Bye for now, friends. Bye, Zay. Thanks for joining me.